What's up, everybody? Welcome back. Welcome back. Happy Saturday. Happy Saturday. Today is April the 19th, 2025. What's up, Tino? What's up, Big Dre? Shout out to y'all. Shout out to Delaware in the building. Peace, peace. What's up, Tino? How's everybody doing on this Saturday afternoon or wherever you're at in the world? Shout out to y'all. Today is April the 19th, 2025, a few days from Easter. What's up, Donna? What's up, Jay Manson? How's everybody doing? Appreciate y'all joining. I'm not going to be too long today. Haven't been live in a few days, but I'm not going to be too long-winded today. If y'all haven't noticed, this past week, the markets have been real tightly consolidated. So not really much going on in the markets. Not much really going on in the markets. Big Dre, you say you're gonna take my advice and watch again on the big TV. Yeah, when I'm pretty much outlining the concepts that I go by, it's best to watch it on a larger screen compared to like a phone. But if you're trying to understand how to learn technical analysis, I would say watch it from a tablet, a computer, desktop, laptop, or a television. What's up, Sneaky Pete? Appreciate you joining. Shout out to y'all on this Saturday. I'm not going to be long-winded today. We're just going to do a quick market review, and I'm going to outline some things that I see pretty much playing out in the charts. What's up, Lenny? Appreciate you joining. Appreciate you joining on this Saturday afternoon. What's up, Echelon? We in the building. I'm going to ask y'all, because I like to rely on y'all. Has there been any impactful news in the markets? Fundamentally, has there been anything impactful fundamentally going into after Easter or coming up in in a few weeks? Anything impactful that we should look at or determine or talk about? Not much. Yeah, they pretty much, what I'm noticing right now, the markets have pretty much the smart money, institutional liquidity. They have pretty much removed their liquidity out the market. So the past 2 weeks, the market has been real consolidated, real dry, real choppy. That's because there's no institutional sponsorship in the market. What I'm noticing is they're going to pretty much wait until after the holiday week. And then we're just in the first quarter we're just in the first month of the second quarter. If y'all just joining, make sure y'all hit that like button for me, subscribe to the channel, click the link in the description below if y'all want to sign up to the Patreon. With the Patreon, I'm just starting to produce the pro lesson. So that's going to be more specific, dealing with specific models, trading models. So I'm producing the pro lessons. So what we got right now on the screen, we got XRP currently trading at $2.08. We got XLM 24 cents. We got XDC trading at 7 cents. We got HBAR 16 cents. Bitcoin 85,000. Ethereum 16.15, Algo 19 cents, and Solana $138. Lenny, XRP futures supposed to go live on Coinbase next week. Yes, on the 21st. I'm gonna be looking for that. That's Monday, pretty much. Monday. Lawrence, what's good? Appreciate you joining. Appreciate y'all joining. Shout out. Y'all could be doing anything on this Saturday, but y'all choosing to spend some time with me. Understand where the markets are going to go. That's pretty much what we do. We're going to forecast the market. Let's go ahead and look at the economic calendar for, let's see, the week that just passed. So today is Saturday the 19th. So let's go ahead and look at the upcoming week, which is the 20th through the 26th. So let's go ahead and look at that. Lenny, they already have the chart up on TradingView, but blank. Oh, I'm gonna look at see, that's what I asked y'all for. See, I didn't even look. So I definitely appreciate that, Lenny, for acknowledging that. We're going to look at that. That's very valuable. Matter of fact, I'm going to look at that right here in a second. I got to look at, before I do that, let me know what the ticker is. What is the symbol for the XRP? Is it XRL? I forget. I'm going to look it up. But let me know to confirm what the ticker is for Coinbase. I'm going to look it up here in a second. So for the upcoming week, we have no economic news on Monday, which Sunday is a holiday, which they don't have that listed currently. I don't know why. But we all know Easter Sunday. Not everybody celebrates Easter Sunday, but Sunday is a holiday. Monday, no economic news. So I'm not going to expect nothing to go on unless something unknown happens. And if y'all been paying attention, this is how I start off my analysis, by looking at the economic calendar. And if you've been following me the past 2 weeks, I pretty much been saying, hey, I'm not expecting nothing going on in the market. And it's based on this economic calendar. Because during these specific times of the day, that's when they release volatility. They give volatility injections into the market during these specific times of the day, specific times of the week. So next week, Tuesday, we got some medium impact news, but the high impact news comes on Wednesday of next week. We got PMI data, and we got some other high impact news going into Thursday, unemployment claims, and then Friday. So I'm going to go ahead and say April is pretty much done for me. For me, April is done. I'm not going to expect too much more going on into May. April has just been an off month. It's that first month in the second quarter. Let's see what May has to hold. And I'm going to outline something in the charts here in a second. Okay, XRL. So speaking of the charts, let's go ahead and come over here to the markets. I'm gonna go ahead and look that up. I'm gonna bring that up right quick. Let me go ahead and plug that in. XRL. I'm gonna come over here on the trading view. I'm gonna go to futures, see where it selects futures. I'm gonna type in XRL. And there it is right there. The XRP futures derivatives contract on Coinbase. So I'm going to highlight that, drop it down. And yes, they have the contract months. So the current contract month, which is not, well, I'm going to say it's trading. If they're listing it, it's trading. I'm going to look at it in a second. But as you can see, they have the contract months, April, May, June. So I still don't know all the specific and details about this, but I'm going to look a little bit more this weekend. But I'm going to go ahead and select on the current contract month, which is XRL J 2025. XRL J 2025. I'm going to select that. And it's not live yet. It's not live. See, it's listed. That's a good thing that it's on the platform. But you can see it says no data here. So it's not live. So we have to wait until they, you know, like they announced Monday. But that's a good thing that is on here. See, as I selected, it's not popping up. But I appreciate that, Lenny. We're definitely going to look into that. If y'all just joined, make sure y'all hit that like button. And if y'all don't know, these futures derivatives are huge. They're pretty much really not talking about them compared to the ETFs. Everybody else online are caught up into the ETFs. But the futures are way huger, in my honest opinion, way bigger than the ETFs, because that's where more institutional capital is going to flow into these futures contracts. But they're not really discussing it. So we're going to go ahead and I guess I'm covering it, I guess. So here we are, XRP. We need to zoom out. Let's go ahead and zoom all the way out. I'm gonna go take y'all to a 6-month time frame. Each one of these candles takes 6 months to complete. The current candle that's currently trading, let me hide this right quick. Let me hide some of these things, clean up my chart right quick so y'all can visually see. And this is what I mean by being on the television. If you're just on the phone, you might not be able to see this. So this current candle, it began on January 1st, 2025. This is a 6-month candle. So 2 of these candles takes 1 year to complete. Let me rephrase that. 2 of these candles complete 1 year. That's what I'm trying to say. So this is a very long-term chart. This chart barely moves if you're zoomed out. But that's a good thing that we're zoomed all the way out. I want to get this perspective. This current candle has 2 months and 12 days left. So I'm already going to, because of what we have already done. Remember, January, there was a very exciting month coming off of December, which was in the fourth quarter of 2024. December 2024, we broke out in the fourth quarter. And then we rolled over into January 2025, which began the first quarter. And that breakout continued. And what did it do? It traded higher and took out the previous all-time high, which is right here. I told people ahead of time, we could do two things. We can break out and continue higher, or we break out and smart money on lower time frames, which that's why those derivatives contracts are going to be huge. Smart money offloaded their long positions, leverage trading, and took profit at the previous all-time high. And then the market retraced way back down. So this candle, the current candle that's trading, as I zoom in, this candle was looking like this candle right here at one point. We traded higher. And I like to demonstrate this right quick. Let me bring up a rectangle. Bring up a rectangle. And I like to take this rectangle and I like to extend it out and show you visually what it looked like at one point. It looked just like that. So this candle at one point broke out, took out the previous all-time high. And then what did it do? They offloaded the longs and started shorting the market. And this is what this candle did all the way up into current date. This candle went all the way back down and now it's currently trading just like that. You see that? That's exactly what happened. Now on lower time frames, this is a 6 month. On a monthly, weekly, daily time frames, the market is just consolidating. It's consolidating on lower time frames. So we always want to stick to the higher time frame narrative, the higher time frame bias. If y'all just joined, make sure y'all hit that like button for me. Yes, huge liquidations. Makes sense, right? It makes sense. Like if y'all been following my channel, institutions like BlackRock, they are into high frequency trading compared to like old investing like Warren Buffett, buy and hold long term. Yes, that's a feasible strategy, but that's not the modern strategy. The modern strategy is fast money, trading, making profits at the speed of light. That's what I'm trying to introduce to a lot of people that aren't aware of this. These institutions are trying to trade at the speed of light, making money in both directions, up and down, both sides of the market. Even in this consolidation right here on lower time frames, there are trading opportunities, scalping, but this isn't a scalping time frame. This is a long-term position trading time frame, this 6 month time frame. This is a multi-year cycle time frame. Remember, only 2 candles complete 1 year. So keep that in mind. So we got 2 months and 12 days left to complete this current candle. And look at the damage it has done above the market. Now it's just consolidating like it didn't even do nothing. If you just zoom out, you don't even see the body of the candle. It looks like nothing is there. It looks like nothing is going on. So that was all by design. So let me take y'all attention to something that I'm paying attention. Y'all point out, do y'all see it? If I already talked to y'all about this, don't say nothing. But for the ones that are just joining, do y'all see, if y'all been following my content, do y'all see what's potentially forming? I'm already 2 months ahead, 2 months out. So if y'all witness me do this on the monthly time or the 3 month time frame months ago, why wouldn't I be trying to show y'all again, zooming out, what I potentially see forming in the market? Why wouldn't I be, why wouldn't I be confident in what I'm about to present to y'all? Shout out to Lenny. Lenny engaging today. So for y'all that are brand new, the markets are algorithmic. These markets trade algorithmically. They repeat over and over and over again. Consolidation, expansion, retracement, reversal. It does nothing else. It seeks liquidity. It seeks inefficiencies. And every now and then it goes from high resistance conditions to low resistance conditions. Other than that, the markets are generic and they repeat over and over and over again. It's repetitive. They're algorithmic. That's how I was trained. That's how I was learned. There's not too many people out here that's going to tell y'all price action is controlled by algorithms. The interbank price delivery algorithm. The interbank price delivery algorithm. I'm going to leave it at that. Now, what do I know? I'm just some stranger on the internet. Y'all might not have to You know, you don't have to trust me, but I have proven, I got documented live streams telling you where the market is going to go ahead of time before it happens. And based on current price action and how price is trading before this candle closes, I'm getting the indication that they're going to want to go ahead and bring this back lower. And then some of y'all that keep up with the fundamental news, it aligns with y'all's analysis when we're talking about legislation being placed. More ETFs. They're getting all the ETF documents, paperwork, futures. They're getting all that lined up, and they're going to drag price out until the perfect time. Everything is coordinated by these people. It's not random. So can y'all endure another shoot? Can y'all endure until potentially 2026, 2027? That might not, some of y'all that might not want to hear that, but I'm saying y'all gotta be, I'm being real. These assets are long-term assets. These assets are long-term assets. They're not overnight get quick rich no more in crypto. Now, if you hold a lot of these assets and as the price slowly and gradually rise, you're going to get rich because you hold a significant amount of these tokens. But if you're somebody who's just coming in and you're just trying to get started, you're not probably, you know, unless you're working with a lot of liquidity and a lot of capital, you're probably going to have to think long term. So what I'm about to highlight is, you see this large candle right here. There's a void in price. It's not valid until this candle completes right here. The current candle that's trading is not valid until we get a 2-month close. We got 2 months and 12 days to complete this candle. Once this candle closes, this 6-month fair value gap below the market that I'm highlighting. Let me see what color I want to give it. It's such a long term. I'm gonna just color it black because it's gonna be a black hole. It's a long term chart, so let's just give it a black hole. That might not be a good demonstration. No, let me see white. Let me see. This is all preference, by the way. Y'all can do this however y'all want to do it. I like to play around with this. Let me see. Let's give it a red color. Boom. Okay, red is going to do. So once this candle completes here in 2 months and 12 days, which that's a long time from now. That's why I told y'all, a lot of y'all, go out, enjoy your summer. Don't, and y'all not going to listen to me. I don't, you know, for the ones that do, shout out to y'all. But if you're investing in these assets, go out, enjoy your summer, your spring, touch grass. And let's see what happens in, 2 months, which will be May, June. When we come back in July, which I'm still be here doing analysis, but remember I'm talking about this. July will start the next 6 months of the year. That's the halfway point of 2025. And remember, the year is divided into quarters. And we'll be going into 2020, the third quarter of 2025. So we'll be at the halfway point of 2025 going into third quarter 2025. What's up, Ryan? Appreciate you joining. If y'all just joining, make sure y'all smash that like button for me, subscribe. Once we complete this candle, we're going to form that new candle that's going to ride us out until 2026. There's going to be a large inefficiency in the form of a BISI, which stands for buy side imbalance, sell side inefficiency below the market. It's a fair value gap. It's a level in the market that they left behind inefficiently. The algorithm is most likely going to want to come down, trade down here to make it efficient. Fill it in. It doesn't have to fill it all the way in, but it's potentially going to want to fill it in. And check it out. I just discovered this as well. I had to keep zooming out to get a better analysis on price action currently. Why is the market trading like it is on the 3 month, the monthly? I had to zoom out to the 6 month. And remember, the higher time frame has more significance over the direction in price. The higher time frame, write that down in y'all notes. The higher time frame has more significance on the direction of price. Remember that. So I'm gonna go ahead and calibrate this. What I'm gonna do is I'm gonna leave it in my charts too. I'm gonna leave it in my charts, and it could be a very dry May going all through July. It could be very dry. You know, this is the year of legislation and regulation. So they're going to drag that out probably third, fourth quarter. I'm not tuned in like everybody else, but I just keep up with price action. So what I'm doing right now is I'm going to calibrate this wick low. This wick low is the low or the high of the fair value gap. It's a price of $1.61 and 53 drops. Make sure y'all paying attention. And then I'm gonna calibrate this high right here, this swing high. That's a high of 74.44. And boom, now this fair value gap is calibrated. When I say calibrated, it is precise. Like when you follow my analysis, we look for precision. If y'all are signed up in my Patreon, the link is in the description below. We deal with precision. We are patient. We are snipers. That's what I'm creating in my Patreon. I'm creating people that want to be snipers in these markets. And we're going to exercise patience. And then now what I'm going to do now is I'm going to, let me go ahead and label the fair value gap. I'm going to label it, come over to text, and I'm going to put 6M, which stands for a month. I'm going to make it a little bit bolder. 6 month BISI / FVG. That's a fair value gap. I'm gonna highlight that. That's a long-term fair value gap. It's a potential area where the algorithm will want to refer to. Remember that. Hopefully I'm drilling this into y'all subconscious. If you watch me over and over again, it will start to be drilled in your subconscious. So next thing I'm gonna do is I want to get those quadrants. I want more specific levels. And y'all pay attention. Y'all seen me do this recently. So why would you ever doubt me now? Y'all recently seen me do this. So why would you doubt me now about what I'm highlighting? Not saying I got any doubters. I'm just saying, if you've seen me do this before, we're going to see it play out again, because the markets are what? Repetitive. They repeat over and over again. If y'all brand new, smash that like button, subscribe. So I'm going to take a Fibonacci from the high or the low of this wick. There's two ways you can look at it. You can look at the low of the wick or the high of the fair value gap. They're the same price point. So I'm gonna take a Fibonacci. I'm gonna drag it from the high down to the low of the fair value gap or the high of this wick that forms the gap. Next thing I'm gonna do is I'm gonna calibrate the Fibonacci. Those are my Fibonacci settings if y'all ever wanna save them. I only got a few highlighted right now, but then there's other levels that I have that I use. So if y'all wanna go ahead and screenshot that, save it, you can do that. Who else is going to do that for y'all? A lot of people just pull out Fibonacci's and don't explain nothing to y'all. Fibonacci's are nothing special. They are just measurement. We're measuring quadrants. We're measuring ranges. That's all we're using it for. And you also got to know how to learn how to lay the Fibonacci tool. So what I'm about to do is I'm about to calibrate it. The low of the wick, which is $1.61.53. And then next thing I'm gonna do is I'm gonna take the high of the wick, which is the bottom of the fair value gap. I'm gonna label it 74.44. Now, Fibonacci calibrated. Now you got accurate pricing. Do you see the midway point? That's the accurate midway point of the fair value gap. The midway point. So now let's look at some of these potential levels here in the next 2 months that price can come down and trade to. Now, we can always check it out. Don't get it confused. As analysts, as professionals, we can always adjust our analysis. So who cares if you get it wrong? You're not gonna be perfect in analyzing the market. All you're worried about is getting in sync with institutional order flow, getting in sync with order flow. So don't be feeling bad. Don't be feeling shamed if you're not always precise. You're not always gonna get it 100% accurate. And let's just say, okay, the market for whatever strange reason starts to move away and go higher. Okay. In the next 2 months, let's say this candle right here currently, it goes up higher and it closes higher. Let's say it just closes like that. Okay, cool. Once that closes in 2 months, this gap is going to still be valid, but I prefer it to move away from it. The further we move away from it, the less likelihood that we come back down to it. So do y'all get it? So we can adjust for that. We can adjust for that. But let's just say this candle currently closes like this today. Let's say this candle right here closes like this today, and we got a long time. We got all the way into July until it closes. But let's just hypothetically say it closes today. And also this candle can close bearish. For example, let me show you with this rectangle. It could close like this. It could close bearish just like that. And then wherever it closes at, I will adjust the gap, the fair value gap. So you have to be flexible as an analyst. You have to be able to readjust your analysis on the fly. So that's just part of the game. No, you're not going to be 100% perfect. That's just me being transparent. Who else is going to be realer with y'all about that? It's okay to get it wrong as long as you're more right than you're wrong. That's all that matters. And with what I'm showing y'all and with what I'm teaching y'all, it's almost too accurate. It will scare you how precise this can get. It will scare you how much precision. It might scare you a little bit once you start first trading and using these analysis. But let's just say this candle closes right here today. Then the next candle forms. Look at the potential price levels that we can trade down to. Look at the top of the fair value gap. That price level at the top of the fair value gap is $1.61. $1.61. What is that going to do for people in the market? Are they going to be done with the XRP? And remember, we got 2 months left to complete this candle. So once the next candle forms, this will take 6 months to complete, going all the way into 2026. So what do we do in that next 6 months candle? Do we drop down here? Does it take 2-3 months to get down here? Does it do it in July or August? Does it drop down here in August? Or do we drop down quickly in August and stay down here into December? So that's just something to think about. I know a lot of y'all got fatigue and a lot of y'all don't want to witness it, but y'all done seen me do this before. So a lot of y'all that are day one subscribers, y'all truly believe in this. But look at the top of the fair value gap. That's $1.61. The upper quadrant is a price level of $1.39. The midway point, which is the equilibrium, the midway point of the gap, which is the 0.5 level, that's $1.17. Now, anything above the 50% level, that's all a premium. Overall, this is a discounted PD array, which stands for premium discount array. This is a discount array because it's below current price. So if it trades down here, it will be a discount. But within the discount, there's a premium. Below the midway point is a deeper discount. So if you just divide the fair value gap in half, the top of the midway point is a premium. The bottom of the midway point is a discount. Now, if we drop below the 50% level, there's a price level of 96 cents. And then for whatever strange reason, which I don't want to see that, I don't think it will happen, they want to drop it all the way down to the bottom of the gap, which I don't see that happening. That will be 74 cents. Anything is possible, but we're far away from that. We're a long way from that. So what y'all think about that? Let me know in the comments. Let me know in the chat. What do y'all think about that? Lenny, you say if it drops into the 6 month discount range, I'm selling 2 kids and loading up. Whoo, Lenny. Your wife is going to be mad at you, Lenny. Your wife is going to be mad at you. Big Dre, you say you're going to accumulate? That's for damn sure. That's for damn sure. I still got me personally, I still got a tough time buying at $1.61, $1.39. I got a hard time buying at those prices, but guess what? Those are the new discounted prices. Those are like the inflation prices that you got to get it in now. So, but me personally, it cringes me because I know where I came from. I was down here. Let me show y'all right quick. I was all in here. Look at this fair value gap right here. I was all the way down here buying in this range. I was all in here accumulating in this range. So it's definitely going to pain me to have to accumulate at those price levels. You say you're going to sell her too? Lenny Wild. Yep, Lenny Wild for that. Jude, what's up, Jude? Got to put that squeeze on people who bought at $3 and $2 range. Yes, I agree with you. Lawrence, you said me too, Big Dre. I don't mind because I know where I'm going. Yes. In the meantime, while they play around with price, they got to allow, keep this in mind. Remember, the XRL, which is the derivatives futures, they have to allow institutional capital to come into that market. So in the meantime, as they build liquidity for ETFs and futures and whatever else they want to roll out, this underlying asset, the commodity XRP or whatever digital asset, it's going to be choppy. It's going to be volatile. And they're going to build the liquidity for the underlying asset. If y'all didn't watch my video, my live stream, where I showed you the former CFTC chairman, he said, which stands for the Commodity Futures Trade Commission. He said the futures markets or the derivatives markets pretty much create price discovery for commodities. So if you don't know, gold, silver, oil, they're all, the prices of those commodities are all controlled by derivatives contracts, because that's where most liquidity is flowing into, not really the underlying asset. Investors, like the average institutional investor, doesn't own oil. Y'all understand that, right? The large institutional investor, he doesn't just go out and buy physical barrels of oil, but what he prefer to do is trade the derivative contracts of oil. Same with gold. There's not a lot of large institutions that have solid gold on their books. But what they can do is go trade the derivatives contracts of solid gold. And that's where all the institutional capital is flowing into those derivatives. Same thing with this digital asset market. They're creating the same foundation for this same asset class. For y'all that hold the asset, and that's why I say, that's why I'm looking at a 6-month time frame. For y'all that hold this asset or these assets, y'all are special people, because most people won't even be able to fathom owning these tokens. Just like you can't fathom right now owning a oil well. Imagine if you right now had a oil well. Imagine if you had several barrels of oil. Imagine if you had tons of gold or a gold mine. Imagine that. But a lot of y'all can't fathom that right now. But if you own, for example, XRP, you own a foundational asset to the financial system that provides liquidity, allows them to move money at the speed of light. It is gold, it is oil, it is diamonds. So those things need to be stored properly and secured properly. Make sure y'all are doing y'all security checks monthly. If you need to do it more frequently, do it more frequently. In the meantime, if you learn this skill set, you can go participate in the derivatives, the futures markets, and take advantage of price volatility and earn cash. You can earn cash and build your cash. You just need to learn this skill set, which I'm teaching right now currently. Let me go read these comments. Real life, what's up? What you said? 190. Let me see. 192 golf for note. I'll be rich. What's up, Jar boy? So owning one XRP is like owning one oil well, if you want to look at it like that. So for example, yes, imagine that. Y'all just don't understand how much liquidity and money these institutions have, and once they start combining this stuff together, like the utility of these assets are not going to be seen by retail. It's not going to be known and it's not going to be widely known by retail. These are tools. Those little digital tokens that y'all are purchasing, which seems like it's nothing, those little digital tokens are going to be like the wheel, the liquidity, the new mechanics, the digital mechanics to make money and tokenization and whatever else they can think of to create with these assets. Those are the machines to the matrix, the money matrix. So imagine that. These are new machines to the money matrix. These are new tools that the matrix can use for the money matrix. So You own a piece of that. So cherish that. Like, y'all gotta zoom out. That's what I've been doing for crypto. That's why if y'all been knowing me, a lot of y'all are brand new to me. If y'all been following me for a long time, I've been making it public that I don't trade crypto. A lot of people were jumping into meme coins at the time, just jumping into anything. I was the advocate of trade futures. Trade futures. Like, they got futures contracts right now that y'all can go take advantage of that are way more liquid than meme coins. Y'all just need to learn the skill set and learn how to analyze the market and trade. But the stock market, the S&P, the NASDAQ, the Dow, gold futures, oil futures, corn, wheat, cattle, all of those markets are way more liquid than a meme coin market. Real life banking, what you said, banking gold back in the day did the same with gold for a note. Okay. Lenny, retail would not be able to own XRP eventually. No, even right now. And I think those numbers, I've been seeing those numbers like the total people that own crypto, it's like 300 million people. I don't believe that. I don't believe on this planet right now. I don't believe none of these articles that they outlining, because in my personal life, and I'll be outside. In my personal life, people might have heard about crypto, and if they did, they know about Bitcoin, Ethereum. Other than that, the masses where I live at in my circumference don't know shit about cryptocurrency. So how is there 300 million people, even though that's a small amount of people compared to the world population, even when you go into foreign countries? Them people don't quite know everything about crypto yet, in my honest opinion. I could be wrong, but from what I'll be studying and what I'll be seeing, I don't think there's 300 million people that own crypto. There might be 300 million plus wallets, but 300 million people that own crypto, what y'all think about that? Naquan, what's up, Naquan? You heard Jerome Powell about to turn on the money printer? Yes, that's another thing. If that happens, that's going to be a risk-on environment for crypto, commodities, assets around the board. Lenny, you said you agree. Nobody you ever talked to know about crypto. Echelon, you said you don't feel like a lot of people own crypto at all. It's a brand new concept to the average man. You know how many hurdles you have to jump through when you first. You know how many hurdles y'all have to jump through when you first come into crypto, and now things are moving at the speed of light when it comes to like legislation, institutional capital, institutions wanting to get on board. So your learning curve is going to have to be real quick. Your learning curve, you didn't have the time that I had and a lot of y'all had. I've been in crypto since 2017. Now, I failed in those first years. Like I was in and out, didn't know, just like the average person. And then around 2020, that's when I pretty much took it. I said, man, I need to jump back in this and study a little bit more, because Bitcoin kept going higher. And I'm like, nah, bro, I can't. Nah, what's going on? So I had to study it a little bit more. And that's when I started cracking the code. But even then, from 2017 to 2025, that's a significant amount of time to just be familiar with crypto. And people that are just coming in, just hearing about it, they don't have much time to hit that learning curve. Ryan, you say you never hear about anybody talk about crypto? That's what I'm saying, y'all. That's what I'm saying. But back to price action for XRP. This is a long-term, drawn-out time frame. I just wanted to highlight that for y'all. If y'all missed anything, make sure y'all go back and look at the live stream. I give you price levels 2 months. Listen, write this down, because you already know I'm going to pull it up. 2 months from now. Well, I'm already 2 months forecasting this in price. If y'all are in the Patreon, this is how, y'all are getting, this is part of the Patreon as well. This is like mentorship. If y'all are brand new, go sign up to the Patreon to get those lessons so you can learn this. But for a lot of you, hopefully I'm answering a lot of questions for y'all in the Patreon. Let me see right quick. So let's go take a closer look at price. So from the 6 month, Let's drop down to the quarterly time frame, which we're in the second quarter. I'm gonna go down to the 3 month. 6 month, which is there's 2 candles that completes 1 year cycle. You start on the 6 month time frame. We go down to the 3 month. That's the quarterly candle, where each one of those candles take 3 months to complete. Each candle is first, second, third, fourth quarter of a yearly cycle. So it's drop down to the 3 month. So far on the 3 month time frame, remember I highlighted that 3 month fair value gap. We dropped down into there. So when I start my analysis, knowing that on that 6 month time frame, we got that 6 month fair value gap. Knowing we got that 6 month fair value gap, this is going to be my beginner time frame, because do we consolidate these next several months? And it's setting up. Listen, I'm gonna tell y'all right now, it's setting up beautifully. It's setting up beautifully. It's just gonna take time for a lot of y'all. A lot of y'all don't have that patience. Remember, I highlighted that 3 month fair value gap. I'm now about to bring it up. 3 month fair value gap. You can see we already traded down into it. Let me do this right quick. So I'm gonna hide that 6 month fair value gap because it's not valid until we close that 6 month candle. So let's hide it. Now on the 3 month time frame. Y'all witness me highlight this 3 month fair value gap months ahead of time. Currently we traded down into it. After we traded down into it, first of all, that was your opportunity to accumulate at a discount. We dropped down to it here in April. We went down to $1.61. That was your opportunity. Also, that low created that low that could potentially be forming on that 6 month fair value gap. But anytime we trade down to here, you be patient. Now it's not an opportunity to be buying right now. If you want precision, if you want to learn how I do it, now isn't the time to be accumulating. That time has passed. Now, if you want to go ahead and buy at a premium, that's on you. It's 208. If you do that, there's a possibility that price will come back down. And because you're antsy, you was impatient, you already pulled the trigger and you kind of missed the target above the target. You got to be patient and wait for another opportunity. And a lot of y'all, because of the hype, y'all might not understand that, because that's why I don't listen to the influencers. I don't listen to mainstream media. I don't listen to none of that. My media and my news is these charts right here, because they're algorithmic. They repeat over and over again. I got thousands of hours in these markets. I see this shit happening all the time. So we already traded down into there. Now, once this candle closes, we got 2 months and 12 days to complete this candle. Again, that 2 months and 12 days is that 6 month candle as well. So once this candle closes, there's a possibility that the next candle or the next quarter, which will be quarter 3, we drop down into this gap right here. And that starts in July. So in July, there's a possibility that we trade back down inside this level in that potential 6 month fair value gap that is not valid yet. And this will provide y'all another opportunity to accumulate. So for y'all that keep up with the mainstream news, what's coming up, or the fundamental news? What's forecasted to be happening fundamentally in the next 3 to 6 months? What's coming up in the next 3 to 6 months fundamentally that could potentially, be sentiment that could potentially make these markets seem like they're being drawn out? That's what I'm trying to say. In the next 3 to 6 months, fundamentally, what could potentially make these markets drag out in time? Shout out to you, Excalibur. So you saying stablecoin regs? Yes, that's a huge one. Stablecoin regs. Fed rates, yes, all of that. We want to talk about tariffs, yes, tariffs, regulations. So we have to let all of these things play out. Remember, that's why I say, man, just take a breather, man. Y'all should be doing good, especially if y'all been in this market accumulating before all of this. We in a whole new phase. If y'all was in this phase during 2020 to 2024, into 2024, that phase is done with. Now we in the next phase of this. Y'all had passed that test. Now we reset. Now the new test has begun as far as new analysis in the market. You should be up. You should be up. If you was in these markets from 2020 to 2024, you should at least accumulated 30 to 50,000 XRP. If you was like all in on XRP from 2020 to 2024, minimum 50,000 XRP. If you were to accumulate that much XRP right now, you would be up six figures, over $100,000. If you was in the market from 2020, 2024, you will be up over $100,000. Now we're rolling over into this new phase. We're almost at the halfway point of 2025, rolling over into 2026, going into 2027, all the way forecasting out to 2030. So from right now to 2030, hold on. That's all I'm saying. Hold on, because this market is setting up beautifully to pop higher. You said boss did the math too fast. What math did I do too fast? I'm not getting it. I remember days. Let me tell y'all. I remember days. Let's go down to the monthly time frame. I remember days back during this time period right here, right above my webcam. When the market would just trade like this, I was envisioning, okay, where could this market expand to? And I was doing this every month, every day, every week. It don't stop. So let's go back to about 2022, and we dropped down into this consolidation. And I was dropping I was dropping big bags on this. And I'll be like, okay, there's a SIBI right here, sell side imbalance, buy side inefficiency. But we would have to drag out all these months. But I know, okay, if we can get right here, we could potentially trade through that and go higher. And guess what? And during all these months, here goes another BISI right here, fair value gap. You see how the market drops down there? I remember these days of buying. I remember this it's like programmed into my mind. Buying on these days when the market drops down to this fair value gap right here, and I pull the trigger and the market drops down to everybody else was buying it at 52 cents. That was everybody's new hype. Oh, we had 50 cents. No, I'm being patient and I'm buying it at 40 cents. Market drops down to 40 cents, and then it consolidates for months, and eventually, boom, it breaks out. The summer of July 2023, it breaks out. It trades into this SIBI right here. We trade above it, and that was very exciting, trading above it. Taking out buy side liquidity over here to the left of the screen. Old highs, boom. We even went up to a price of 92 cents during that summer. Now, I want to believe that was something, first half of the court case ended, one of those summers, July of 2023. Something happened with that court case. And I remember this breakout right here, boom. And we went all the way to 93 cents. And everybody was like, oh man, that was it. Just below $1. And then what they do, drop it back down, consolidate for months. So the whole time I'm like, okay, where can we go at? Where can we potentially go? All of that is done. All of this right here is done. We're not in that phase no more. And if you just zoom out, what market profile is that right there for the people that have been paying attention? What profile is that? What market profile is that? Oh, you said the XRP calculation on 50K? Yeah, I did that pretty fast. I done crunched them numbers too much, man. Crunched them numbers too much. You said Jerome was waiting for July. Yeah, okay. You said when XRP, okay, yeah, I remember Ryan. That breakout right there is when XRP was not a security and the whole community got excited and shit and whatnot. And no, these things repeat over and over again. What they was doing is taking out liquidity. And guess what? That was if y'all endured that, if y'all been in these markets since then, there's no reason for y'all to be dragged complaining now. Now, imagine just coming in now and having to go through the next phase of this long out process, this long drawn out process of what the markets do. They repeat over and over again. But y'all are correct. Yes, consolidation. This was a long-term consolidation. It was very brutal. Even myself was frustrated. I had weeks where I was like, man, this don't make no sense. This don't make no sense because I'm in the traditional markets. They're very volatile. They're trading normally. The stock market, the futures markets. And I'm like, man, this is crazy, but I endured it. I was frustrated, not every day, but after seeing this pop right here, okay, I'm thinking, okay, an expansion is beginning. But nope, they take out liquidity and hold it. This is a holding pattern. This is all also high resistance liquidity conditions where they're just holding it. You see those large wicks chopping around, high resistance. And guess what? That's before I knew what high resistance was. But this consolidation lasted for over 1,000 days, really. But 976 days, what I got currently highlighted. I'm gonna go ahead and say over 1,000 days consolidation. That's a multi-year consolidation from 2022 all the way to 2024. But if you want to extend all the way back out to 2021, when we broke out and the market started selling off, coming back down in a sell program, you can add that as well. So over 1,000 days. If y'all went through that, y'all have endured a lot. Now we're no longer. Look how the market has went from high resistance to low resistance, meaning it's cleaned up a little bit. It's not so tightly trading. It's loosened up. So now you're starting to see wider ranges in the candles, wider ranges. And what they're doing is they're going to do this move right here. I've seen it 1,000 times. It's just the process of waiting. Drop it down, retracement into consolidate, into a fair value gap, and then boom, expansion higher, just like that. And it's going to repeat over and over again. They can put it in a consolidation. They can put it in a sell program. And they're going to just repeat the process. But from what I'm thinking, they're going to just go ahead and shoot this out. You know, they're going to take it to levels way beyond where we're currently at. Way beyond where we're currently at. So y'all just keep an eye, you know, just learn these concepts, man. That's all I got to say. Make sure y'all hit that link in the description to the Patreon. Just learn these concepts. So that's XRP on the monthly time frame. Remember, on that 3-month time frame, we got a few months left. Well, 2 months left, and then we'll go into the second half of 2025. And again, I'm of the opinion that they're going to drag this out for the next couple months. And some of y'all are saying Jerome cutting rates in July. Matter of fact, let's come to the economic calendar again. Let's see going into April, or the last week of April. On this week right here, which is from the 27th to the 30th, May will start on the 1st, on a Thursday. So May 1st starts on a Thursday next week. And what I'm looking for is the rate announcements. I want to see when the next rate announcements happen. Unemployment rate. So not that week. They're not going to announce nothing that week. Let's go out to May. Let's go out to that first week of May. There we go. So the first week of May, this is what y'all should be looking for. Take it down, jot it in your notes if y'all keep up with the rate announcements. May 7th on a Wednesday, 1 o'clock p.m. Eastern Standard Time. We got federal funds rates. That's the next time they come up there and announce what they're going to do with the rates. So by a flip of the coin in the chat, what y'all think? They're going to just continue to pause? Because the rest of the other countries like Europe, the European Union, they've been dropping rates for consecutive months now. Other nations are dropping their interest rates. But here we are in the United States doing our own thing, like per usual. You know, we got to be different. It says interest rates at which depository institutions lend balances held by the Federal Reserve, actual greater than forecast, Let me see. Pretty much that's when y'all look for that. Next release will be, after this release, which is May 7th, the next one will be June the 18th. So be on the lookout for that. So those are the next two federal funds rates announcements, which is the interest rates announcement. So we want to jot that down, keep that in mind. Tino, you say you think he cuts them in June? Let's see what they want to do. Let's see if they want to cut them in June. That's a good point, Tino. So a lot of the people, you say whatever Trump does, they do different. That's because, and a lot of people, I don't understand this. I don't understand certain people, or I don't judge nobody. But if you're gonna get in this financial game, you need to understand the mechanics of money. You got to understand who's in control. Trump has no power over the Federal Reserve. If he decides if he ever decides he thinks he wants to overpower and start changing shit with the Federal Reserve, what y'all think is going to happen? What y'all think is going to happen? If Trump ever, he's going to do what he's told. It's all a game. But if he ever decides to overstep the boundaries of the Federal Reserve and what they have established for well over 100 years, what y'all think is going to happen to a sitting president if he ever decides to overstep the boundaries of the Federal Reserve? I'm just curious. You know what I'm saying? Y'all don't get it? Y'all don't get it? Y'all don't understand? What y'all think would happen? Impeachment? No. What was the last president who thought they were going to overstep the boundaries of the Federal Reserve? What happened to them? Huh? What happened? Who was the last president who thought they was going to overstep the boundaries of the Federal Reserve? And if y'all don't know, who watched The Simpsons? Like, I remember before Trump was even a thing, that The Simpsons predicted what potentially could happen to Donald Trump. They've been forecasting it. And then here recently, during the last election term, that he pretty much, it was an attempt, which I think it was like a move. I think it was a strategic move, but there was an alleged attempt on Donald Trump's life. But if he ever decides he thinks he's going to overstep the boundaries of the Federal Reserve, what do you think is going to happen to a sitting president who think they're going to come in? If y'all don't know the central banks, if y'all don't understand history, and I always like to do this, let me come to YouTube, put y'all on game. Nah, that ain't it. If y'all ever on YouTube, this is one of the key documentaries that helped me understand the money system. This documentary right here, they got several versions of it. I'm not going to play it, but I always refer people to this documentary right here. The Money Masters, History of Central Banking. It's a 1996 documentary. I'm into shit like that. A 1996 documentary, The Money Masters. And look how long this documentary is. I had to break it up in sections. I break it up in sections, and I done watched it several times. And, breaking it up, 30 minutes here, 1 hour there. I'll break it up and complete it and then go back and watch it again. But it's a 3 hour and 39 minute, a 3 hour and 30 minute documentary. And it pretty much gives you a foundation of the history of the central banks. And if y'all don't know, central banks have been funding all sides of major wars since the dawn of history. If you don't know, they are the financiers of warfare. So if you fucking with the financiers of warfare and you trying to change anything they got going on, what you think is going to happen as a sitting president? That's all I'm saying. Impeachment? No, they going to handle you. Before, check it out. And this is a quote. I forget whoever quote this quote. Before they ever give up power, before central banks ever give up power, they will go to war. They will tear up the whole system before they ever give up power. They will make sure people are sacrificed before they give up power. And then because they're greedy, they make sure people are sacrificed to gain power. Even though people ain't, people might not be trying to bring them down, but they want more resources. They want more assets. Y'all be thinking Jerome, man, look. Donald Trump can't tell Jerome Powell nothing. If y'all don't know, Jerome Powell is a gangster. Jerome Powell is a gangster. Donald Trump better not ever think to speak to Jerome Powell any type of way. I'm just saying. Even though Donald Trump is a gangster too, but we talking about two gangsters, and one gangster is more powerful than the other gangster. Yes, tanks in the streets, Lawrence. There will be tanks in the streets before these people ever give up power. And if you ever want to learn a little bit more information about this, go watch this documentary right here, The Money Masters. Go watch that documentary, The Money Masters, putting y'all on game. And then there's other documentaries explaining it. The brief history of U.S. central banking system. Like, they got little animated cartoons. They were fighting against it. Jekyll Island, the creature of Jekyll Island. And that was just they had several different versions of central banks that they've been trying to put up in the United States. The United States was the last pit stop That was the last destination that they needed to set up, and they fought decades. They fought decades just to get a central bank into the United States, and they did it underneath everybody's noses. That's when they did it. Trump put him in office. What y'all talking about? Who put who in office, Lenny? Yes, I agree with you, real life. Bro, I'm fascinated with all this because guess what? These people got too much control. These people got too much control over my life. I hate that. I like to be a sovereign individual. I like to have free will in this lifetime. So in order to do that, you got to understand, okay, who's in power, who's in control. And this shit goes back to Roman times. This shit goes all the way back to Roman times. Like, I don't think y'all understand, a lot of y'all, some of y'all might not understand how long central banking goes back in history. And y'all think y'all gonna change that narrative anytime soon? No, you got to fight for it. If you want it that bad, there must be bloodshed. You must shed blood in order to gain back power. That's the only thing they agree with. Like, if you ain't trying to shed no blood, then hey, it's big bank take little bank. The rise of the Rothschilds, the richest family in the world. This shit gets deep. Central banking nightmare. Y'all go do y'all research on central banking, bro. So, hey, go do y'all research. What else can I look at? Let's go ahead and look at XLM. So there's a narrative being built, and there's a narrative being built. Yes, the Titanic, Niquel, the Titanic. There's a narrative being built right now. I don't know if y'all been paying attention to it. I have. XLM versus XDC. Now, I'm not here picking no side. I hold both of them. But there's some things that are changing that I'm paying attention to. Have y'all been keeping up with it? I'm gonna ask y'all in the chat. XLM versus XDC. Let me go ahead and pull up XDC. And I'm not here controlling no narrative or nothing. I'm here to make financial moves. So I'm not really caring about, okay, who's the better platform. Like, I understand both sides, and I understand both of them have a niche, and both of them will be here. So don't get me confused for trying to paint a narrative. Don't confuse me for that. Don't y'all do that to me. Do not do that to me. Do not make me feel like I'm painting a narrative. I just want to have the conversation with y'all in the chat. XLM versus XDC, because recently XLM, what I have researched and what I have been seeing, XLM is going after trade finance market. Okay, XLM has entered the trade finance market. So what I like to do is I like to go to their websites. This is what I like to do. Let's go to stellar.org. And again, we just chilling today. It's Sunday. It's the weekend. If y'all don't know yet, the markets have been drained with volatility. There's no volatility in the markets right now. So really nothing to talk about. That's why I haven't been live in the past week. I think I went live last Sunday, and I have not went live since because I already knew, okay, the market is lacking volatility. So this is XLM website. They have a real sleek, nice design website. I like to look at that when I'm looking at companies. And then let's go to Zenfin. XDC, zenfin.org. So which one do y'all like the best? I'm gonna start there. Which one do y'all like more? There's no competition. There's no compare. I just want to ask the community, which one y'all prefer, XLM or XDC? And based on what? Based on what? Y'all let me know in the chat. Lenny, you prefer XLM? Give me a reason, Lenny. Give me a brief little reason why. I'm trying to pull up a document right quick. I'm trying to do something right quick. Y'all let me know in the chat right quick before I get into this. It's just a conversation starter. It's been popping up recently. People been debating it, so let's go ahead and talk about it. One second, I'm pulling up a PDF document. All right, let me read the comments. So, Ryan, you say, I hold XLM, no XDC. Okay. Real life is deep learning trust law. What are you talking about? What are you talking about, real life? Echelon, I'm on XRP and XLM. I heard XLM is probably ongoing $1,000 though. Going $2,000. Lenny, XLM has major sponsorship like Franklin Templeton. XLM for smaller transactions like retail. XDC got more of it. Got more of what? Oh, you talking about you got more of it, Lawrence? I understand that. So we all know, if y'all don't know, you got to study these assets. Blockchain. Let's come over to XDC. XDC, the major markets that they're going after is, and look, there's their partnerships right there. Major partnerships, R3, Circle, Blockchain Intelligence Group, some major hitters, Copper, a lot of major things. And they mainly focus on trade and finance. So what I'm trying to go is go to, I haven't been to the website in a while. Ecosystem, dApps, developers, no. Documentation, tools. XDC status, What I'm looking for is markets, network metrics, security. We all know they're fast. XDC is dealing with tokenization, real world assets. So is XLM. XDC is mainly going after the trade finance market. I'm trying to look for on their website where to go to. Let's go to the ecosystem dApps. Okay, here we are right here. Ecosystem and dApps. R3 is a big partnership. Yes, it is. It's a very huge partnership. XRP for banks, XLM for retail. So this is XDC. These are pretty much the things. It's the ecosystem. They're known for RWA, DeFi, DPIN, which I don't even know what DPIN is. NFTs and DEX. They have a DEX. These are some of the apps or the dApps that have already been built on the XDC network. So this is the world we're entering, where people are going to be building apps and, you know, applications that will be seamless and plug in. So we got Impel, TradeFinex. This is what's dealing with the trade finance right here. So TradeFinex is an application built on XDC. It is a peer-to-peer trade finance platform to create trade instruments of value between buyers and sellers in trade financial markets. It is an open protocol for banks, institutions, and users consortium led governments makes it truly decentralized. Essentially what they're doing is, let me see right quick. TradeFinex platform will help buyers secure capital at global competitive rates, give suppliers visibility in global tenders and customer base, as well as provide financiers real-time visibility on their investments by digitizing their assets and IoT integration. So essentially what they're doing is they're tokenizing trade documents. Now, the conversation that has been coming up between XDC and XLM is, where XLM has entered the trade finance market, which is, I believe, over a $20 trillion market. Y'all go ahead and Google that for me. How large is the trade finance market? I want to say it's a 20 trillion market. Now, guess what? I feel like everybody can eat. Everybody can eat. Yes, XRP is a derivatives market platform. Nothing is going to come close to compare. Not even payments. Payment is not going to come close to the derivatives platform. But this is Stellar's website. And let me see right quick. Real use cases. Let's go to their use cases. If we go on the use cases right here, payments, which that's the thing. XDC has no payment. They're not integrated. They're not designed for payments. They have to go to a third party, if y'all don't know. And that's where the conversation comes. If XLM and XDC are both going after the trade finance market, which one would institutions prefer? One that already has a settlement layer on it where it can settle instant payments instantly, or one that can tokenize. And guess what? XLM can settle payments, tokenize assets instantly, real time, real fast, low energy. And then pretty much, if y'all don't know, I've been around this long. If you ain't been around this long, XLM is a clone of XRP. It is a replica of XRP. It's the same copy clone of XRP. If y'all don't know that. It's not, I don't want to call it a fork, but it's a clone of XRP. Raise your hand if you knew that. But XLM has built-in payments, built-in settlement. XDC does not. Not saying they can't integrate it and it can't happen, but XDC does not have built-in payments. So if they're both competing for that major market, that $20 trillion market, which one would institutions would prefer right now? Like corporations and companies, which one would they want to go for right now? That's the conversation. I'm not here starting a fire. That's just a conversation that I see going online. It had to make me rethink like, damn, XLM is major. Let me read the comments. Founder came from XRP. Yes. Jet McCaleb. Yes, it's the little brother of XRP, but don't sleep. Like I think XLM is a big dog. Like it's not just a little brother now. Shit, XLM could be potentially big brother. It ain't gonna be like XRP, but hey, it's gonna hold weight. Yes, XRP married to XLM. I agree. Not just in price, but the technology is the same exact technology. Now, I believe they came to the table at some point and was like, look, we gonna take this side of the market. Y'all take this side of the market. Because XRP was already established. Ripple was already established. Jed McCaleb who was a founder of Ripple. He wanted to branch off, go create Stellar. And he did. And he probably had the rights to take that software, that technology with him because he was a part founder of that. And when he did, well, there was another market to address, the retail side of it. This was a plan way before we even knew about crypto probably. This plan probably goes back prior to 2010. Y'all got to do y'all research on that. I'm not right about everything. And listen, I'm not trying to sound right. Y'all don't get me confused. Don't get me confused for other people. I'm not trying to push no narrative. I'm not trying to be 100% right. I might be leaving out some facts. I might be leaving out some key information, but that's pretty much the gist of what this stuff is. That's just the gist of it. So Stellar compared to, or XLM compared to XDC, XDC is a network that is still building out its stuff. People are already using XLM right now. XLM is in over 100 countries right now. Also, me as an American and y'all that are Americans are in the Western world, from Europe to Canada to over here in the United States and wherever in the Western world. Stellar is an American company. Ripple is an American company. Hedera is an American company. Zenfin is not an American company. And if y'all look at the narrative that Donald Trump is trying to paint, then if we're Americans, we want to be more aligned with American digital assets. Isn't he trying to bring tax-free crypto for American companies? Now, where does Zenfin lie in that narrative? Not saying they're not going to be big. Don't get me confused. Not saying they're not going to explode. But are they going to come to America? And I've been seeing people telling me that they're going to be moving over to the States. But right now, they're not an American company. And also, they're not a complete platform. Also, they're integrated with Ethereum. Their whole purpose is to try to help Ethereum out and speed it up a little bit and make it more seamless. But the thing is, with tokenizing documents, Stellar can do that right now. XLM can do that right now. Tokenize documentation and settle it instantly. XDC can't do that. They can tokenize documents and then they have to go through a third party. It's not built into the network. It's not built in. Payments is not built into XDC. So that's pretty much what I wanted to bring up. A lot of y'all are saying XLM. Prior to 2010, where the hell have I been? Man, this stuff been in echelon. This stuff has been in the works before crypto, before Bitcoin. Y'all don't know that? Come on now. Y'all don't know that? Y'all should know this is all organized and CIA and all that. Come on now. Y'all should know these blockchain technologies, the new financial systems, have been in talk since probably the 70s, the 80s, the 90s. Especially after we got through the 90s and got into the early 2000s, they wanted to update the payment systems then because they were still outdated. We're still using payment systems from the 90s, y'all. Come on now. Matter of fact, Swift. Let's go Google Swift. Swift. I just seen that, Mark. I had just recently seen that. I was looking at that yesterday. The Matrix. That's crazy. Swift. Society of Worldwide Interbank Financial. SWIFT. The Society of Worldwide Interbank Financial Telecommunications. Let's go ahead and click on that right quick. Let's go to the Wikipedia. Swift. This is how long Swift has been around, y'all. Come on now. Swift, the telecommunication systems has been around since 1973. And here we are still using a payment system, settling payments 3 to 5 business days. And it's been around for 51 years. So you don't think the conversation of a new payment system hasn't been in the works since the 90s? As technology kept booming, as Microsoft's, as computer chips, microchips, as they kept advancing, coding, as these things kept advancing, you don't think they wanted to completely overhaul this? Like at least in the 90s, the mid to late 90s, they didn't want to overhaul this, but they kept it going into the early 2000s. And here we are, 2025, and it's been 51 years later. And we're still at this moment having overhauled this. Right now in this year, right now, we're in the process of overhauling this entire system. So I just want to make that a fact. You know what I'm saying? Make sure y'all hit that like button for me if y'all just joining. Subscribe to the channel. Hit that link in the description below. But that's the conversation I want to have with y'all. And me right now, I have been pondering on this for weeks now. I haven't been talking about this, but what you like to do is when you want to do your research, come to the actual websites, come to these people's websites and study it and compare blockchains, compare them. Another thing I wanted to bring up, let me go ahead and bring up this PDF document. Let me minimize that right quick. Let's bring up this PDF document. How many of y'all have ever seen this document right here? This document came out in November 2021. Central bank digital currencies for cross-border payments. How many of y'all have ever seen this document? A lot of y'all probably have. 2021. It is from the World Bank. The World Bank. The World Bank. Have y'all ever seen this document? Do y'all ever go this deep as well? Ryan, you have. Yep, Tino, you have. A lot of y'all OGs have, but for y'all that are new, it's okay to say if y'all haven't. I want to see who has not seen this documentation from the World Bank. Who is the World Bank and who are they connected to? If y'all know in the chat, let me know. Who is the World Bank and who are they connected to? See, Mark, you haven't. See, there's a sector of people that want to be in these assets, and I'm not coming at you, Mark. I'm just in general. There's a sector of people that are in these assets that have no idea how deep this shit goes. Central banks, World Economic Forum, yes. World Economic Forum, yes. Yeah, it's a quick Google search. The World Bank is connected to the World Economic Forum. Also, the United Nations. All these organizations, the World Bank. Also, SWIFT. Also, the ISO. Shit. When I say ISO shit, I'm saying like the ISO, I forgot the something society or something. I forgot what it was. But ISO, all those entities. The World Bank is connected to all of them. You don't just get the name World Bank for no reason. So in this PDF, let me zoom out right quick. And what I want to do is I want to scroll all the way down. And I haven't read through this whole PDF, by the way, but I'm going to specific points in this PDF. I'm going to the section where it says non-CBDC cross-border payment models. And remember, this came out in 2021. So I want to come over to this section right here. It says stable coins for cross-border payments. It says, and this is directly from the World Bank, stablecoin refers to a class of digital currencies that are relatively stable in terms of their price. We should know that. And they're not talking about CBDC stablecoins neither. I think they are confusing people with those stablecoins. The ones that they're going to introduce, like RLUSD, those are CBDCs. I hope y'all know that, right? Those are CBDCs. And then there's other stablecoins, which are commodities, Ripple, XLM. But check it out. It says, pretty much, stablecoins offer instantaneous processing and security of payments as many cryptocurrencies do. They also offer stability with respect to their parity against fiat currencies. Now, directly from the World Bank, 2 digital currencies that fall into this category are Ripple Nets. God damn it. 1 second. 2 digital currencies that fall into these categories are RippleNet's native digital currency, Ripple XRP, and Stellar Networks' native cryptocurrency, Stellar XLM. Both Ripple and Stellar enable faster and more efficient cross-border payments relative to correspondent banking. So there are only 2 digital currencies that are liquidity based. There are only 2 digital currencies that are liquidity based. So when we come back to that conversation of XLM versus XDC, which one would institutions prefer to have? And this, remember, this is directly from the World Bank. And remember, I only say that because XDC does not have a payment. They don't have a payment solution built on their network. There's only 2 payment tokens. And remember, XLM and XRP are clones of each other. Ripple, XRP, Stellar, XLM. As we continue, it goes on to explain what Ripple is. Ripple is a real-time gross settlement system. Currency exchange, remember that. It's a real-time gross settlement system, instant payments. Currency exchange, that is the derivatives platform built on the DEX, the derivatives platform built on the network, and remittance network created by Ripple Labs. It is a US. Remember, this came back out in 2021 before the narrative of Donald Trump saying United States crypto companies will be tax-free. Ripple is a US-based technology company. Ripple enables multinational corporations to settle cross-border payments by transferring XRP through Ripple network, resulting in on-demand liquidity. The 3 parts of the Ripple ecosystem serves to maintain the ledger. It says, unlike Bitcoin and Ethereum, Ripple does not run on proof of work. It runs on proof of stake, consensus, mechanism. See, y'all got to do all these research. For y'all that are new, I haven't seen this. Y'all got to understand if you're going to invest in this, and this is what makes this very valuable, these networks, these tokens that y'all buy. If you understand what a consensus mechanism is, that alone will tell you how valuable those tokens that you own are. That alone, once you start deep diving into what is a consensus mechanism compared to proof of stake and proof of work, then you will start to realize, oh shit. Once you start to understand what a Byzantine general's problem consensus protocol is, then you will start to understand like, oh shit. But let me continue to read. I'm not gonna read through all this. A lot of y'all probably seen this, but I'm just comparing XRP and XLM compared to XDC. And how valuable and slept on XLM is, because XLM be get shitted on lately. You know what I'm saying? XLM don't get no respect unless you know. Let me read any I'm gonna keep reading. Let me go to the section where it talks about XLM. Oh, here it is right here. This section right here. It says, by contrast, Stellar. So Stellar enables individuals and end users, which y'all call retail, Stellar enables individuals and end users. Also, it's going to be enabling like small mom and pops, and corporations can use this as well. It's not going to just be retail, us using it. No, if they're going after the trade finance market, tokenizing trade documents, this Stellar is also going to be used for large institutions, corporations. Don't get it twisted. So I think a lot of people get confused. Oh, Stellar's for retail. No. If they're tokenizing trade finance documents and transacting them and settling them, corporations, institutions are going to be using XLM as well. But it says Stellar enables individuals to trade money directly with each other across jurisdictions using entrusted intermediaries to handle FX, foreign exchange, and funds transfers. Who you think those entrusted intermediaries, who do y'all think those are? Those aren't retail people. Those are going to be large firms. Stellar is an open source, decentralized protocol for digital currencies to fiat money. Again, just like XRP. XDC is not that. This right here is just pretty much saying decentralized protocol for digital currencies. It too is a derivatives platform. XLM is a derivatives platform. What's up, Daryl? Appreciate you joining. Lenny, I only hold XLM and XDC. No XDC. I was thinking about buying some, but after this deep dive, no, don't sleep on XDC, bro. And that's what I don't want to do. I don't want to sway people from buying XDC. I want to point out what I've been researching and deep diving. Who are the kingpins? Who has the most, who are the heavyweights? There's only 2 payment networks in the crypto ecosystem that deal with settlement, payments, liquidity, money. Everything else, yeah, tokenization, derivatives, that's huge. And that's probably going to have to be spread out. But XRP can do derivatives as well. XLM can do derivatives. XDC can do derivatives, but there's only 2 that deal with payments. And show me the money. That's what I want to talk about. Like, if we're dealing with something with the money, then shit. It says Stellar allows cross-border transactions between any pair of currencies. That's a derivatives platform. The Stellar protocol is supported by the Stellar Development Foundation, which is a nonprofit. Compared to Ripple, they're a for-profit. XDC is for-profit. I still don't understand the nonprofit stance that Stellar has. That's more research I got to do. And then it goes on. It says Stellar does transactions in a few seconds. Y'all should know that. It also uses a consensus protocol, which is the Byzantine, same thing as Ripple. It says, unlike Ripple, where decentralization is controlled by Ripple, decentralization in Stellar is expanded by trusted nodes deciding to extend trust to other nodes, according to the Federal Byzantine Agreement, FBA. The Stellar Lumen can be traded to different currencies, just like XRP. XDC cannot do that. Y'all understand it, right? We're dealing with currencies, money, FX. Same with Ripple. Stellar Lumens can be traded to different currencies, which means that performing a cross-border transaction using XLM is essentially using XLM as the bridge currency between 2 jurisdictions. Now, we only hear the narrative that, oh, there's only one bridge currency. No, XLM too is a bridge currency. And this was the World Bank PDF. If y'all don't know, y'all go look it up. Just go to Google if it's still there. I don't know if it's still there, but y'all go to Google. It dropped back in November 2021. Just type in central bank digital currencies, cross-border payments. Y'all can go do your own deep dive in it. I just had to bring that up so we can discuss Ripple, XLM, and XDC. XDC was not mentioned. They mentioned Bitcoin, Ethereum, but they mainly talked about Ripple and Stellar. Now, everything else like Hedera doesn't deal with payments. Or do they? I could be wrong. But they don't have a FX platform on Hedera. They don't have an FX platform on Zenfin XDC. But y'all go check that out. A lot of y'all have that. Y'all, and sometimes y'all got to do a refresher. Go check that out and then come to the website. Study the websites, man. Y'all got to study like Stellar's website. Y'all got to study Ripple's website, Zenfin, Hedera. Go to their websites. There goes some partnerships for XLM. Again, Circle. Not only is XLM dealing with Circle, XDC. Let me go back to their page. XDC is dealing with Circle. So let me check it out. Check it out though. For Circle, which is a stable coin. Circle is the company with USDC. Which one would they prefer when it comes to settling, transacting faster payments, instant payments? Are they going to prefer XLM? Or are they going to prefer XDC? Now, clearly they're using both, but what one does instant settlements? And I just showed y'all. What y'all talking about in my chat, man? What y'all talking about? Who's a snake oil salesman? Who was saying 3 to 4 digits end of the year? Y'all talking crazy in my chat? Okay, I got y'all. Y'all be easy, man. Y'all be easy. But that's pretty much it right now. Let me just review XLM right quick. XLM currently trading at 24 cents. Just consolidating. Let me zoom out. Let's go out to that 6-month time frame for XLM. On the 6-month time frame, we got this fair value gap right here on XLM. And let's see how we close this candle in 2 months. If we close it, if we was to close this candle today, there's a small little gap that will form on the 6-month time frame. But it will be inside of this fair value gap right here, all the way over in the left. But XLM just consolidating around. It don't look real good. XRP got a cleaner price action than XLM. But remember, because of that document and who it came from, the World Bank, that's heavy for me as far as Ripple and Stellar, XLM and XRP being the leader in payments and solutions and stable coins. And, you know, it's just the leader because they were mentioned. I have to go off of that. XDC, I own XDC. But XDC is still being built out. I got some other things that I don't like to talk about online that I see going on with XLM, like the developers. They got some, I ain't gonna say sketchy, but I'm not sure. But in my opinion, XDC is still being built out. But Ripple and Stellar, they already have built out, their platform's already built out, ready to go. And then you got other networks like Hedera, XDC. They're gonna be here, but they're still building on those networks, on those platforms, when you already got things ready to go right now. XRP, XLM ready to go. There's still people building on them, but when it comes to payments, derivatives, that shit ready to go right now. That's XLM just consolidating. Again, like I told y'all earlier, not much price action going on right now because there's no liquidity in the market right now. Let's go to XDC right now. XDC currently trading at 7 cents. Let's go out to the 6-month time frame. On the 6-month time frame, we already traded down into, no, we didn't come down into the order block. Let's see how we close here in 2 months. From what I see on the 3-month time frame for XDC, we traded down into this fair value gap below the market. You see how we trade down there? That was your opportunity to accumulate at a discount. Now it's showing signs of wanting to move higher. I wouldn't be surprised if XDC go ahead and pop higher. Let's go down to the monthly. 7 cents is still a steal right now for XDC. And hey, if y'all need it, still a great opportunity, man. Still a great opportunity. B Rush, shout out to you. I'm not sure how far along H-bar is. I think it's more built than XDC. I kind of agree with you. I agree with you, B Rush. I think from what I do, when like I say, I like to go to their websites. I like to go to Stellar. I like to go to XDC. XDC haven't really done any updates, and you don't hear much coming from it. But like when I go to Hedera, go to their website, hedera.com. Presentation is everything for me, by the way. For me, presentation is everything. When we're just comparing websites, I would say Hedera has a top-notch website. XLM has a top-notch website. Ripple pretty much took a lot of things away from their website. But when we just come down, look at partnerships, all that, Hedera ain't missing with their partnerships and whatnot. And then you go to their ecosystem. on their website. And what am I looking for? Their ecosystem. Okay, go to their ecosystem. They got Web3 application, enterprise applications, wallets, custodians, network explorers, tools, integration, No, use cases. My bad. Use cases. Go to use cases. And then you can see the different markets that they're going after. Data integration, IT. So we don't see that from, this is why Hedera is huge, because they're going after this market. This is their niche. Data integrity and AI, real world asset tokenization. So you got Ripple that can do the RWA. You got Stellar that can do RWA. You got Algo that can do RWA. Hedera can do RWA. Zenfin can do RWA. So that's a market that is probably going to be, that's the derivatives market as well. That's a market that's probably going to be diversified and spread out between different tokens. But like I say, there's only 2 payment platforms that deal with money, settlement of currency, settlement of money, and that's XRP and XLM. And they can tokenize real world assets and do other things like DeFi and stuff like that. Y'all say Ondo. Now check it out. I'm not into everything. I've been hearing about Ondo. Who's more established? That's my point. Which I'm not knocking nobody, anything that's up and coming, because yes, in the future there will be the unknown. Things will come in the unknown that will take off and blow up. It always happens throughout history. But right now, I can't be in everything. Y'all shouldn't either, because y'all are retail. Unless y'all are liquid millionaires right now. Y'all should want to be diversified into too many assets, in my honest opinion. But who is right now established, ready to go, already working? Ripple and Stellar. That's just my opinion. Don't let me sway y'all from nothing else. In my opinion, right now, Ripple and Stellar have the foundation, the partnerships, and they're already being used. Some of these things have to still be built out. These other networks, they got to be built out. And then they got to establish those partnerships. And they got to be adopted by institutions. And it's okay. I understand, B-Rush. Hey, I ain't gonna say how many I got, but it's less than 4. It's less than 3. I ain't gonna say which ones, but yeah, I'm coming to the conclusion like 1 is great, but for sure 2. 3 is diversifying. That's what I'm saying. 3 is being diversified. Ondo is bringing real world assets with crypto, selling major partnerships like MasterCard and expanding into Stellar's payment network. So again, by you saying that, Lenny, that Ondo is expanding into whose network? Stellar's payment network, right? And after reading off that document, so that tells me, is Ondo, y'all check it out, is Ondo a layer 2? I'm not for sure. I can't be in everything. I got to go for the for sure assets right now. And based off that PDF that I just showed y'all, I want to go for the for sure assets. For sure. The safest and for sure already got a foundation, got an establishment already built out, and they're clones of each other. That's what I agree with B Rush. So why buy Ondo, not just Stellar? If they're going to be integrating with XLM and Stellar, what does that tell you? It can't. Okay, there might be some interoperability. So a layer 1 interoperating with a payment system, layer 1. So Ondo, it don't make sense for Ondo. Let me check it out. I know Ondo just recently popped up, and that's the wave online. And I don't know where this stuff be coming from, like Ondo, XPR, all these different platforms. So if Ondo is doing RWA, Stellar does RWA. Stellar does RWA, and it's a payment platform. So Ondo is competing with Stellar, and then they need Stellar for transactions and settlements. That don't make no sense to me. Why not just go for the for sure buy, which is XLM? Get the main coin. Shout out to you, Texas Plates. Get the main coin. Now it says Hedera, check it out. It says Hedera can do payments. That's what they say on their website. They saying they can do payments, scalable real-time payments. You say Ondo has collaborated with industry leaders like BlackRock, Franklin Templeton, and Wisdom Tree. So has Stellar. So has Stellar. So has Ripple. So has Stellar. Now, if we're just talking about interoperability in multi-chain world, like Brad Garlinghouse has said, then okay, I ain't got no dog in the fight. Y'all choose what y'all want to choose. But again, let me remind y'all, there's only 2 settlement tokens, payment tokens. Two. So they saying Hedera can do, okay, they're bringing stable coins. Okay, I know about stable coins coming to Hedera. So it pretty much say Hedera can do high scalability, immediate settlement. Immediate. Is immediate I'm gonna ask y'all, I'm not the smartest person in the room. Is immediate the same as instant settlement? I'm asking for y'all who know more than me. Is immediate settlement the same as instant settlement? Texas Play, you say nope. You saying immediate ain't the same as instant because Ripple does instant settlement. Stellar does instant settlement. Hedera is saying they can do immediate settlement. And you gotta, me personally, I'm anal like that. I like to pay attention to keywords. I like to define words so we can get the clear definition. You have to be like that to have a full understanding of what they talking about. Okay, Texas Plays, you said it is. Okay, let's just go say, okay, they claim they could do instant settlements. So even then, if you compare to, matter of fact, let's go back to XDC. Nowhere, I've researched this website. Nowhere on their website they say they can do instant settlements for payments or instant payments. They can do tokenization, but when it comes to instant payments, that's not on their website. They can do RWA, they can do DeFi, and don't sleep on DeFi as well. That's huge. That's what's gonna make potentially XDC a big hitter. But nowhere up here it says they do RWA, DeFi, DePIN, NFTs, and DEX. They have a DEX, decentralized exchange. But nowhere on Zenfin's website they deal with payments. So even by going off of this, even by Hedera saying they can do payments, that right there for me, they have one leg over XDC. That's just my honest opinion. That's just my opinion. Don't let me persuade y'all. So here we go. USD coin. Hedera plus USD coin. USDC on Hedera offers, okay, USDC. USDC comes from Circle. Circle is working with Stellar. They're working with Zenfin. They're also working with Hedera. And they're saying pairing USDC with Hedera, it offers scalability, low transaction fees, and fast settlement times. It's expected by end-to-end users for both startup and enterprise applications built on Hedera network. They even got like transactions on here. Hedera transactions, create a fungible token. It says fixed fee USD paid in HBAR. It costs pretty much nothing. It costs nothing to do a transaction using Hedera's blockchain. Okay, they saying MoonPay is integrated, but just wait. Let's just wait and see if some of these larger chains, these large institutions start getting on here with their solutions and using Hedera for payments. It's going to be interesting. Let's say like Twitter or, Facebook, Instagram. They start integrating with Hedera blockchain. I don't know all the partnerships. I'm not the smartest man in the room. But Hedera alone has a leg up on XDC, just for the simple fact that they can do payments. That's just my opinion. But hopefully that's a conversation starter, and hopefully y'all can y'all can start looking into that. Let me go ahead and bring up, like, 1 second. Let me bring up Hedera's chart or H bar. You said what you said. Go to their devs for H bar. Let me go back then. Let me go back. Go to the developments, devs right here. Devs. This is the dev section, which, you know, I don't get into this. B Rush. I don't get into this. This gets into the. I do get into it, but I leave this for the techie people. So in plugins and you got the integrations, plugins, and microservices for Hedera. That sounds interesting. Open source. Hedera is committed to open and transparent code, grants, fee estimator, learning center. So let's go over here to integrations. Let's click on integrations under developer. How many devs does HBar Go have? I'm not sure. And if you know how to get to that, let me know in the comments. I don't know where that says that at on Hedera's website. How many developers they have. Now, compared to Zenfin, that's kind of, I get what you're going. Compared to XDC, are you trying to ask me? Let me see right quick. What I like to do is, I'm going to come back to this. How I found the developers and the positions. Let's go to team. See down here at the bottom right hand corner on Hedera's page. I want to go to team. Let's go to that right quick. Let's go to team. I do this for everything. I learned this. I was studying government contracting, and this is one thing the government looks for. They look for well built out websites, and they want to see these individuals. So there goes the chairman, Bill Miller. He's the chair. I'm sure you can go click on his bio. Duncan Meyer, Frank Wang, Monique Moreau, Tom Sylvester. That's the pretty much the board of directors. So that's what I like to see for these blockchains. I want to go see the board of directors. If your blockchain, like Ondo, do they have a board of directors? Do they have a committee? Here goes the committee. Committee. Now let's look down. Let's see if we can look at their developers. They got to meet the leadership team. They got leadership. Let's look at some of their titles. Hedera is well built out, just like Ripple. That's what I'm trying to tell y'all, man. Like the three for me right now, it just shifted. I ain't gonna lie. Ripple, Stellar, Hedera, all three US based companies. And then when you come to their website, you look at how they're built out as an organization. That's one of the first things you want to look at. Bitcoin doesn't have that. Ethereum doesn't have that. That's one thing y'all want to go look at. And what I'm looking for is the developers. Now, let me see one of these titles. President, Chief Information Officer, Chief Operating Officer, Committee of Representatives. I'm sure if I dig deep enough, I will find this. Council. Let me see. Go see council. That's the governing council. So not only they got their board, their committee, and all the people that's built out on the organization, you got the governing council of the blockchain. So again, y'all should know about this. Major hitters like IBM, Google, the ones I'm familiar with, Dell, Chainlink Labs, Ubisoft, Deutsche Bank or whatever. And they still got to add some more. And I don't know what's taking them so long to add it, which that's interesting. Maybe they add some banks to their committee. But I'm looking for the devs. They might not want to list their developers. Let's go look at partners. I'm not sure. Maybe we need to careers. Let's go look at careers. This is what I want to look at. Careers, not saying I'm trying to go apply. And if y'all was into this world, of coding and developing software engineering, I would be trying to like look at some of these companies to get hired on with. They got remote flexibility, competitive compensation, You're going to get that 401k. You're going to get that medical, that dental, that vision, that life, that disability. It must be nice working remotely, having good life insurance and disability insurance. Education stipend. Hedera believes in the benefits of lifelong learning. Full-time employees receive $2,000 per year to spend on job-related learning. Boy, y'all better capitalize on that. That could be, oh, it say job-related. I'm about to say, y'all go capitalize on that $2,000 per year. Job-related learning. So you further advancing. That's a good thing right there, man. Like, how many are y'all jobs are paying y'all to go further your education? Paid parental leave. Check this out. Our global parental leave policy allows 12 weeks of primary caregivers and 4 weeks of secondary taken as needed with no interruption in health benefits. Yes, indeed. You said 110 developers. Hey, that's huge. Okay, if HBAR got 110 developers, how many does Zenfin have? Y'all go Google that. Go find that. How many does Zenfin have? XDC, Zenfin. And then I just heard Ripple is supposedly hiring like over 1 million developers. So, you know, look at that right there. And then y'all can go look up Stellar. How many developers does Stellar have? That's why I appreciate y'all. Again, I'm not the smart. I'm just a specialist in technical analysis. But when it comes to some things, my mind doesn't gravitate to, like, you know, the techie side of things. It's interesting to hear and talk about, but my mind doesn't gravitate to all that. And shout out to y'all who are into that, and y'all can go do quick research like that. I appreciate y'all. That's why we got a network. We learn something every day. We know how many employees Ripple has, or, you know, we should know, but that doesn't mean they can't contract out work to developers. So they're definitely going to bring in help to develop the blockchain. You said anything IT requires mandatory learning. That's good. They help pay for that. Yes. HBAR is the truth. I need to go ahead and get into IT. Shoot. From having virtually no days to 2 million devs, no devs to 2 million devs is very Ripple thing to do. That's what I'm saying. Like, man, if y'all don't see the writing on the wall with Ripple, man, what they trying to do, and they're leading the way. And then, like I said, me personally, I got to narrow down my assets. I never had more than 3. No, I had 4, but I just narrowed that down to 3. I had 4. I narrowed that down to 3. And then every now and then, every day, I might be in the shower, taking a shower, or whatever. And I'll be like, damn, should I consolidate this? Should I consolidate? And I think about it real hard. And when I think about it real hard, I got to go back to, like, learning. I got to come back to these websites. I got to come back to documents. I got to read a little bit more because, again, I'm not no wealthy individual where I can diversify. I want to capitalize the best opportunities right now. I want to capitalize on the best leadership, the best networks. And you got to take certain things in consideration, like who's up and running. Who has a better foundation. That's more important. That's just as important as, like, yeah, XDC could be a better network than XLM. It might can do things XLM can't do, but who already is established? Who has those partnerships? And XDC got partnerships as well. But comparing XLM to Ondo, it's clear as day that why would I deal with Ondo when XLM is the already established network? You can't be in all of these different assets at one time. You can't be in all of them at one time. Let me go ahead and pull up HBAR. Did I pull it up? Yeah, HBAR. HBAR currently trading at 16 cents. It traded down into this gap right here. If y'all should have caught it a few weeks ago. Let's go down to the weekly time frame. So the last 2 weeks, HBAR was trading inside a discount. You can already see it starting to want to leave that discount. Again, if you're pulling the trigger right now, yeah, y'all might say, oh, it's 16 cents. But no, you're missing the target. We are training snipers over here. We're getting snipers prepared for the battlefield. And we pull the trigger when they come down to us. When we pull the trigger, for example, see these candles trade down? Look over to the left. Look at this BISI right here. That's a buy side imbalance, sell side inefficiency. Guess who pulled the trigger when it dropped down inside that 3-month fair value gap, all the way down inside of that gap right there, waiting for it to come to where I want it to come to. Do you think it's random that it trades, boom, right there? And it also scooping some up right here at this level right here at the upper quadrant. That's roughly around 13 cents. It went down to 12 cents. And now it's currently sitting up in profit. Now we can come back down lower. Let's go look at this 6-month time frame. Let's see how we close here in 2 months. Not really looking real good, but it is what it is. And then the stock market, when I tell y'all all markets have paused, everything has paused. One thing I want to focus on, let's look at the dollar. Dollar showing heavy weakness. This is a 6-month time frame for the dollar. What I outlined right here was a daily fair value gap. I'm bearish on the dollar right now, if y'all don't know. So as the dollar goes lower, assets go higher. Now it's a delayed effect. They're not all going to simultaneously do it at the same time. It might be weeks apart. But as the dollar trades lower, that's a risk-on environment for assets to go higher. So we could potentially start seeing crypto move higher. Let's see what they want to do with the interest rates. As they lower the interest rates, the dollar goes lower. The treasuries go higher. So those treasury yields might start going higher. The dollar starts selling off. Interest rates start coming down lower. If the dollars are, listen, it could be potentially already priced in. As the dollar starts to go lower, all the way, some of y'all predict in June that they lower the interest rates. We got an interest rate announcement next month on the 7th. So let's say in June, they already start to lower the dollar. It will be already priced in once they announce, oh, the dollar is selling, that we lowering the interest rates. And the dollar has already been selling off. This is the weekly time frame on the dollar. You can see showing the weakness. I want to see it come down to this 6-month order block. It says tech in the stock market. Don't listen to the headlines, man. We're gonna go over to the stock market in a second. And then I'm gonna get up out of here, let y'all enjoy the rest of y'all Saturday. That's just headlines. That sounds like mainstream headlines, echelon. Like tech in the stock market has been getting whooped. I ain't worried about that, man. Let's come look at the NASDAQ. Let's look at the NASDAQ. And on the NASDAQ, we zoom out to a 6-month time frame. On the 6-month time frame for the NASDAQ, all you see is a retracement. All you see is a retracement for the NASDAQ. All it did was retrace. Now, we got 2 months on this time frame, 2 months and 11 days to complete. When we traded lower, we traded down inside of a fair value gap. Again, if the market's about to flip, if the dollar is about to sell off and interest rates are going to be cut, that's going to be a risk-on environment for all assets, stocks, crypto, commodities. It's going to be a risk-on environment. So as stock market comes lower, trades down into this BISI fair value gap, that was them offering stocks at a discount as they start printing money into the system. As they flood money into the system, smart money is going to want to accumulate assets at a discount. You get it? Trade down to this level. And now we're just ranging. Let's see how we close in the next 2 months. We could get more bearish, but look how the market trades down there. This is a weekly time frame. Bounces off this level and then closes higher. Now it's currently trading higher than where it came from. And that's the NASDAQ. S&P doing the same thing. S&P doing the same thing. But I definitely appreciate y'all joining, man. I ain't gonna keep y'all much longer. This was just a quick, brief, chill out session. I ain't really going into depth. Ain't no liquidity in the market right now. So it's a holiday tomorrow. So let's see what we do following the holiday. Monday the 21st. If y'all don't know, if y'all just joining, let me pull this up right quick. And shout out to Lenny for highlighting this. Shout out to Lenny for highlighting this. Futures, Monday, Coinbase, XRP futures. If you come to TradingView, you select futures, type in XRL, and there it is. Now, when I was highlighting this a few days ago, This was not available, but now it's listed because on Monday this will be released. Coinbase derivatives, and I'm gonna keep updated on that. I'm gonna keep track of that, and it should go live Monday. Right now it's not live, but they already plugged it in on TradingView for Coinbase. So XRL, which is the XRP futures contract. If you come over here, select it. They already got the they got the current contract, which is April 2025. It goes live Monday. And then they already got the future contracts for May and June. So be on the lookout for this. And right now, they're not going to be liquid. So don't be expected to be highly liquid. It could possibly be, though. You never know with these institutions. They might want to flood capital. And remember what the CFTC, the former CFTC chairman, I showed this video a few days ago, last week or something. He said, coming directly from the horse's mouth, the derivatives markets control the price discovery of commodities, not ETFs, not speculation. The futures markets are more liquid than ETFs, but all y'all see in the headlines is ETF. No, futures, because that's when institutions come in and plug in all their institutional capital into this market, because this market, the futures market, is their playground. This is where they make the most of their money, in the futures market, and they can dump all that liquidity, that trillions of dollars coming into the futures markets. If you don't think I'm lying, just come to the NASDAQ. Go look at how much money flows through the NASDAQ per day. I think y'all told me that before. This NASDAQ market is very expensive. To trade one contract for the NASDAQ is very expensive. Y'all seen me do it. I did it last week. And I think I'm going to do some more live trading coming shortly. So definitely be on the lookout for that. But the NASDAQ contract, this is the NQ futures, highly liquid market, full of institutional capital. This market right here determines, that's why I don't go look at individual stocks. For what? When those stocks are controlled by the derivatives markets, if y'all don't know. The derivatives markets, which like the NASDAQ futures, control price discovery of individual stocks. So all those individual stocks are controlled by the derivatives markets. Keep that in mind. So the same thing is going to happen with XRP. They're going to control the price of XRP through the derivatives markets, the futures contracts. And if I go ahead and select the contract for April, the contract code is going to be XRLJ 2025. The J stands for May or April. So I'm going to select that. And right now, as you can see, no data. Why is that? We'll wait until April 21st, which is Monday. That's when it goes live. And then we're going to keep you updated. We're going to check it out once it goes live. So I appreciate y'all joining. Make sure y'all hit that like button. Subscribe to the channel if y'all brand new. If y'all interested in learning technical analysis, go ahead and click that link in the description. I got beginner lessons. And I'm going to go ahead and start. I'm already in the process of producing my pro lessons where it gets into more advanced concepts. But appreciate y'all joining. Hopefully y'all enjoy the rest of y'all evening. I look forward to y'all. I look forward to seeing y'all on the next live stream. Until next time, peace out. Thank you.